Hey, everybody, welcome back. It's Mike, your host of Insider Secrets, and I am really impressed by today's episode. I'm joined by Charlotte Dunford. Charlotte, why don't you tell the guests a couple things that you're going to talk about on today's episode?
Right. In today's episode, we'll be talking about the mobile home park industry, mobile home parks, the deal structures, and a lot of other really inspirational things that I've been through and you've been through. So just a lot of good stories, a lot of good advice, good books, and a lot of fun, really.
We laughed a lot. So, hey, you're going to have to jump inside to hear the rest.
Welcome to this edition of Insider Secrets, the weekly podcast that turns real estate investing goals into reality. Each show, we interview guests who are seasoned real estate professionals, actively closing and managing real estate deals. Mike is the founder of My Core Intentions and would like to help you make your real estate investing dreams a reality. Mike coaches you to buy investment real estate, creating short-term cash flow and long-term wealth. Your host and real estate coach, Mike Morawski, has more than 30 years of real estate investing and property management experience. Here's your host, Mike.
Hey, everybody, welcome back. It's Mike, your host of Insider Secrets, brought to you by My Core Intentions. Like I ask every week, I want to know what your intentions are. What are you up to? What'd you get up this morning and plan for yourself? How'd you lay out your day? What things did you think about that you really need to focus on today to move the ball forward for yourself, whether it's personally or professionally? We have to grow personally in order to grow professionally. So I hope that you're working in that direction. I'm really excited about my guest today. My guest is Charlotte Dunford. She comes from Johns Creek Capital. Charlotte, say hi to everybody.
Hi, everyone. Glad to be here.
I'm glad you're here today. We're going to have some fun. We're going to dive in. But first, let me do a little housekeeping. If you guys would go to social media, wherever you hang out, I'm everywhere: Twitter, LinkedIn, Instagram, Facebook, YouTube. Go like us, love us, subscribe, follow us. Wherever you get your social media fix, you'll find us with some great content, great podcasts, and interviews. So let's dig right in. Charlotte Dunford is with Johns Creek Capital, an investment managing company that focuses on mobile home park investments. Currently, they have 20 park investments with a total investor subscription amount of about $3.9 million. Charlotte herself also has created over $500 million in asset value in the past 12 months. Charlotte really comes from humble beginnings and is a first-generation American citizen and college graduate after leaving China with just her belongings at age 16. So Charlotte, welcome to the show. I'm glad you're here. Looking forward to finding out more about that. I always start like this. Tell us one word, what best describes you personally and professionally?
That's a good question. I think personally, what best describes me is one word. That's tough. I would say adventurous, because I feel that in business, in life, you have to be adventurous to be able to take the proper risk needed, to take the calculated risk needed to be adventurous and explore different options. And I think professionally, one word to describe myself would be learning, because I don't let a day go past without reading business books and keeping up with the most current business strategies and technologies, because the world is changing, the market is evolving. If you're not learning, you're going back.
Yeah, how true is that? Good for you. That's awesome. I have a couple questions before we dig into your bio. There were a couple of lines about you that jumped out at me. So how long have you been here in America?
I came to the United States when I was 16 years old. I came here for high school in Pennsylvania. Today is actually my 28th birthday. So I've been here exactly 12 years. And I was very extremely honored to become a US citizen this year in June. So been here for 12 years. And after high school, I came to Georgia Tech studying industrial engineering. And shortly after that, I switched to business program, where I graduated from Georgia Tech in 2017. But the rest was pretty much history. I took a corporate job as a business analyst. It dealt with a lot of data analytical things, data modeling. At the same time, I was investing at the side. I carry the skills of data modeling and data analytics with my real estate experience. So that's when I decided to quit my job and launch this venture full time.
Awesome. We're going to talk to somebody smarter than me. So I love that. Why did you come to the United States?
Right. So in China, I felt like the opportunities there for me was very limited. There was really only one way to become something in China, and under a communist regime is not necessarily the easiest thing to stand out. And being a free spirit myself and being in a Chinese body, but with an American spirit, I was very much influenced by American culture because I was seeking it out at a young age. And at the age of 16, I made the decision to go to American college, which going to American high school would probably prepare me for that from a language perspective and also cultural perspective, which that's why I make the jump. I came alone without my parents, which really enjoyed that. I've always been adventurous spirit and independent from a young age, which really worked out for me in that way.
Nice. Is your family still back in China?
Yes, they are. They've only been here once.
How's your family feel about that? No.
They were worried, but now they are fine. I'm their only child under Chinese one-child policy. So their only daughter go at 16 years old. I imagine it'd be hard for any parent. My parents made a pretty big sacrifice to let me go at 16. And I think that's a very selfless decision on their part. Now they're just enjoying their life without the burden of having anybody living in their home. I guess they can travel everywhere and they quite enjoyed that.
So how did you get involved in real estate and more specifically the multifamily space? Because when I look at commercial real estate and I look at multifamily, mobile homes are in that multifamily bucket. So how did you get involved in real estate?
So this space, the closest thing I would say it compares to is a parking lot. So mobile home park is a parking lot business. It runs on dirt. It's not a fixing furnace business. So that's why this sector is very attractive. I started with a single family home and a duplex while I was holding my full-time job. But then after that, I quit my job to launch a venture, and I found getting into a multifamily or commercial building, the market had just been way too flooded with people and way too competitive, which makes it nearly impossible to get a good deal and then making a good profit. So I have always lived by the rule where go to where the competition is not. I came across mobile home parks, and it has always been a pretty ignored sector and niche within the real estate sector. So I decided to make offers, study deals, get in contact with brokers on mobile home parks. That led to one mobile home park and two, three, four, and growing to today, actually 22 parks with investor asset under management of 4.2 million now.
I have so many questions. Are you doing this on your own? Did you get into this on your own, or did you have a partner or a friend and say, hey, come on, let's check this out? Or how'd you do that?
I originally bought my first mobile home park with investors' money in 2019. And then I met a fantastic business partner who has had a lot of operational experience and a lot of business experience. He reached out to me and we met and chatted about real estate, and everything just rolled from there. And now we're managing partners at Johns Creek Capital. So I do have a business partner and we have a team as well. We have several team members and we want to make sure that we have the infrastructure to handle our growth.
So talk about your model a little bit. What do you look for in that park? Do you just rent the ground and they bring their own trailer, or do you own the trailer and they rent the trailer from you?
So it's actually a combination, and we usually buy a park already built and most of the space is filled. It depends on what kind of project it is. So if it's a light value add project, that just means that it's probably over 90% already filled. All the lots are rented and tenants are just paying lot rent. That is one model. Another type of deals that we get into is where there is a higher vacancy, but you have a lot more opportunities to infill. Size-wise, we focus on small to medium level mobile home parks, where it's a niche within the mobile home park sector. It is usually anywhere from 10 lots up until 40 lots. So anything above that, you'll be considered slightly larger parks. But for us, we really just want to monopolize the small part of this niche and then expand from there.
Okay, interesting. Can you talk about price point a little bit? I know when I pay for a multifamily, I'm buying a deal right now in Tampa, 40 units. It's about 116 a door. I looked at a deal yesterday, like 3 blocks away, and they went 150 a door. I'm like, come on, really? How does that work in the mobile home?
Pricing wise, it really just the cap rate at NOI that determines the appraisal. And for the parks that we acquire, you're usually looking at around $100,000 in total to $450,000. So that's about it. Anything more than that, you're probably going to be looking at a higher price point. But again, that depends on the market, right? So on the West Coast in California, you're probably looking at $70,000 per lot. But here in the Southeast, you can probably get something as cheap as $7,000 per lot or even less. So it really depends on the condition of the park, the vacancy, the market, the NOI, everything. So it's really not a cut and dry number. A lot of it depends on a lot of different moving factors.
You find these mostly in primary markets, or are you finding them in more tertiary markets?
So a lot of it is secondary markets. In the cities, there are not a lot of mobile home parks. A lot of them in the suburbs or even rural areas. The need for affordable housing exists all across the nation and not just in the primary market. Just like any other real estate, it has different levels of market, but most of our parks are. A lot of times they're in the metro, but they're not necessarily in this heart of the metro. Yeah.
Were you affected by the pandemic at all?
We were actually, it's very interesting. You mentioned that I bought my first mobile home park in 2019, and we really took off in 2020. And that's when COVID-19 happened. So we grew with the pandemic. So we have never really operated pre-pandemic. Our whole existence was through the pandemic. So it's very interesting. The biggest impact, I would say, would be the eviction moratorium, which gives tenants the ability to not pay their rents and not get evicted. That really takes away all the ammunition from the landlords. That has really harmed us and really lowered our collections. So the way that we countered that was that we worked with several different state and county authorities and agencies, even ministries, to get rental assistance from them to get the tenants in rent. We try to arrange payment options with them, and we even apply for rental assistance on behalf of tenants for them to get caught up on rent. So it has been a challenging journey, but I would say we're seeing the light at the end of the tunnel. The eviction moratorium is getting lifted, and we're finally starting to be back on track on our collections.
Do you guys manage all your own assets?
We do. Yes, we do.
So what markets do you like for this?
We have several criteria for the market. It needs to be in a city or a county or a metro that has a solid population base. It doesn't need to be in a 5 million population metro, but it does need to be in a place where there are solid employers, the economy is diverse, and one of the major employers is not going under in the next 5 years. A lot of small towns, that stuff tends to happen, especially in this economy. Things can be tough, but I think the primary thing is to make sure that market-wise, they have employers. The housing vacancy rate is not extremely high. Sometimes it can't get high for the reason being there are a lot of vacation homes, and that's a different story. So you just really need to underwrite and analyze the nitty-gritty details when it comes to analyzing the market. We have other deal criteria as well. We have a proprietary algorithm that actually sources all the deals and actually give the deal a passing score or failing score. So it makes it pretty simple.
What do you think your average size mobile home park right now that you're buying?
We're buying, probably looking at 15 lots to 20. Mm-hmm.
Well, they're smaller.
They're very small. So we're in a niche within a niche, as I would say. But I think it's great to be in this niche. They're not very extremely competitive and sought after at the moment. We are able to get it for an incredibly good price, and the returns are much higher.
What might you pay for a mobile home park, 15 lots, that's operating well?
That depends on the market. Operating well could mean that you're making money. But again, it's all the net operating income divided by the cap rate is your price, right? So people usually want to get in with parks like that. They want to get in as a 10% cap rate. So with 10% cap rate, if you are having a 15 lot that you're generating a net operating per year at, $50,000, then at 10 cap, you're looking at a $500,000 purchase price. Operating well could also mean that it's generating a net operating income of $20,000 in the Southeast. And it depends on how much you put into it. Your return could be very high, but that would only yield about, $20,000 to $100,000. The formula is always applying at NOI divided by the cap rate is the price. So it really depends on the math there.
I always tell people that all those asset classes inside that multifamily bucket, that the metrics are pretty much the same. Because what you're talking about between cap rate and NOI and how you're pricing your product is the same way I price a multifamily product. What's interesting though is you're talking about a 10% cap rate somewhere. I don't think I've seen anything north of a 5 in years.
So that's the appeal for home parks, especially in the niche that we're in. A small niche within the niche is because the cap rate is so high. And eventually it does get compressed as people are more interested in it. But we are getting it at a good time and we're able to negotiate to a 10% cap. And that's how you do it as pros. So you don't want to pay for more than what is worth. But at the end of the day, the returns that matter for our investors is all just math at the end, right? So if you have a 10% cap rate and you're getting a loan interest at 4%, then you're making banks because your spread is 6%. But if you're getting a 10% cap rate, then you're borrowing money at a 12% interest, then you're probably losing money. So it really boils down to the math. It's the math numbers that matters.
I always say it's math over emotion.
It always has to be that way. Exactly. You want to make sure the math is as accurate as you can make it be. And a lot of times the modeling, can be a little bit confusing. The modeling, you want it to be as accurate as possible. And the COVID has been challenging because nobody could have predicted COVID. Nobody could have predicted how COVID could have impacted the industry as a whole. So the numbers change drastically. But I think overall, the direction is doing well. And just like the stock market, COVID made everything fluctuate and made everything volatile, but doesn't mean that the market is not going to bounce back.
That's interesting because I don't think we've seen all the effects from it yet. Just look at some of the things like supply chain constraints, right? Look at all the ships that are sitting out in the port and they can't get product in. I said this the other day. I ordered a t-shirt and it took me like 8 weeks to get it. It was ridiculous. So I think that we're going to still see some effects from the pandemic. What I find is really interesting, though, fascinating, is that you built this whole thing in 2020, really. You own 20 assets right now.
22.
I stand to be corrected. That's fine.
Cut that part out if you want.
Yeah. I'll let my editors deal with it. But were the owners wanting to get out? Were you finding assets that owners just were bailing out on? Were you getting better pricing?
It's just that owners have all kinds of reasons to get out. Some of them want to retire. Some of them want to cash out. Some of them are tired of managing a mobile home park. It is a very tough asset class to manage. And you're dealing with a different demographic here. And it is difficult. So a lot of them, they have various reasons. Some of them got it as an inheritance and they just never took an interest in the park and they just don't really care about it. And they let the park run itself and never really took over management. So there's so many reasons, but I think with this reason, we're getting good deals as negotiations. Both my business partner and I are very good deal makers. We believe that good deals are made, not handed to you on a silver platter. That's never the case. If you're going to sit there and expect someone to give you a good deal, it's not going to happen. Every deal is a battle. You have to fight for it. You have to thrash out the ideas and you have to fight. It's the battle from the beginning of escrow to closing. Never a dull moment in real estate deal making. You have to be in the right niche where there's a lot of meat on the bone. And if you're in a already saturated market, it's very unlikely that you'll get any sort of profit out of it.
I love you. You talk my language. A lot of meat on the bone. I always say when I do a deal that when you're planning your exit, leave some meat on the bone for the buyer. So that, hey, look, I can buy this and I can go in and raise rents a little bit. Don't do everything.
Exactly. Yeah.
Yeah, it's interesting. Let's talk. Where do you see yourself going from here?
So right now we're just trying to scale the business and introduce ourselves to as many people as possible, satisfy our current investors extremely well, and make sure we deliver the results that we have projected. COVID has impacted us, but we're finally seeing the light at the end of the tunnel and make more people aware of us and what we do. And like I said, really advance in the small niche of small to medium level mobile home parks. Right now we have 22 parks, and in the next 5 years, we would like to 100-fold that number.
Talk about the type of funding. Is this agency debt? Is this bank debt? Do you have to pay cash? How are you funding these deals?
Our deals are either cash or seller finance, because with the deal size that we have, it's a little bit more difficult to have bank financing, which makes the seller more willing to do seller financing. So seller financing is extremely simple. It's a simple process. It doesn't require nearly as much documentation as a bank would, so that the seller would approve you and then you're good to go. You just get a loan.
10% down, 20% down?
Anything between 20% down to 35% down, sometimes half. It depends on the deal. A lot of things. You can put more down with a lower interest rate or lower price. It's either the price or the term. Something has to give, or both, if you're a master negotiator or the is really motivated.
I don't think I'd want to sit across the table negotiating with you.
I'm usually the good cop in my partnership. My business partner is the bad cop. So I'm actually a nice one. If you want to deal with anybody, you probably want to deal with me.
Okay. I'll take you up on that. Then 2 comments I want to make is it's interesting that you grew as fast as you grew, because one thing I teach in the multifamily space is don't grow too fast, because 2007, I closed 17 deals for 2,700 units. And man, I hardly had time to breathe. So I think people need to watch out for that. Remember, it's a marathon, not a sprint. And you might be in an asset class where it's easier to do that. Here's what else is interesting. Owner financing, creative terms. It's about price. It's about terms. You can structure great deals. I tell a story where I did a 450 unit, $15 million multifamily deal with 250,000 down, and the owner held the paper on the rest. So they're out there. You just got to look and you got to ask. And I think most investors in the marketplace don't ask.
You have to make offers. You have to be aggressive and put yourself out there. And you just don't know what the seller's motivation level would be. You don't even know them. So if they're saying no seller financing, why don't you make an offer? So I know I've sold properties before, and as a seller, I'd be delighted to see any offer. And regardless of the quality, I'll give it a thought. So why don't you put yourself out there, give yourself a chance?
Yeah. So I'm going to ask you a question, and I don't know if you can talk about this from a legal perspective. And if you can't, just say so. But investor returns, what do your investors look at as an investor in mobile home parks?
So the structure, most of our deals, you're looking at 15% internal rate of return, 20% internal rate of return over a 3 to 5 year hold time. So that is for light value add projects. For projects that are development, you're probably looking at over 20%, but over a longer period of time, probably 8 years, sometimes 10. But very, very rare that we go that far. I think that's a general rule of thumb. Our deal structure is usually we're looking at 8% preferred return. After that, we have a waterfall structure where you meet the 8% hurdle, and then we split the profit 70-30, and then it jumps by 4 points each hurdle. The next hurdle is 12%. 40-60 being the investor, 40 being us, and then drops another 4%. It was 16%. It's 50-50, and it stops there. This resets on an annual basis and is accumulated preferred return, which means that if the first year 8% rate of return we didn't hit, for example, the first year we projected 4%, then the deficit will actually carry over to the second year. So investors can have a peace of mind knowing that we're working hard for that preferred return and more, because we don't get paid until you hit your 8%, and we don't get paid more until we hit a higher hurdle.
Interesting. So it's pretty much standard, industry standard. So that space isn't much different. I find it interesting. It was just an asset class I never really got into.
It's more than it's only starting to draw attentions of the investors, which is good news for us because we got in earlier. And when everybody's talking about something, it might be too late for you to get into it because there's just way too much competition.
So yeah, you're absolutely right. Sam Zell got his start in mobile home parks. So he's one of the largest syndicated multifamily commercial. They're in every asset class and in 80 countries around the world today. He got his start in mobile home parks. And I always found it interesting and just never really studied the model. And I think you said it earlier, it's a different demographic of people.
Absolutely different.
I think you have to have the ability to deal with that demographic because it's a whole different type of management structure.
Entirely different. Just like dealing with any customers, if you're dealing with a different demographic customers, you obviously need to be acting in a way where you communicate well with the different customers. No different than any other business.
So I want to make a couple of comments to my listeners here because I think that before we jump into the end here and I ask a couple last questions, I just want people to understand, especially people who are saying, oh, I can't do this, or this business is too hard, or I can't get into it. You have a woman who has come from another country, went to high school here, got an education, went into this business on her own. Today, she's 28 years old and controls 22 assets. You know what? For the people that I've talked to recently that say this is too hard, or I can't do this, or nobody will listen to me, you know what? Get over it. That's all I want to say, because I am really beyond impressed and appreciate this message that you brought. And I hope that people dig into this and really go back and listen a couple times, because it doesn't matter what asset class. My hat's off to you. I honor you. And I think that you're on a great run and keep it up. I'm really glad that I had you on. A couple questions, one tough one and then some easy ones. How do you make high stake decisions?
Okay, good question. I think high stake decisions are high stake because there's a lot at stake, right? A lot of times you have to take a lot of things into account. You have to have a business partner or team members and advisors on your side to make sure that you're talking about it enough. You're reasoning and taking all the factors into consideration. You have to lay out each decision, let's say decision A, B, and C, and lay out different contingency plans for it. So if I make this decision, what are the risks? What could happen? What could go wrong? If that were to go wrong, what are contingencies? So once we have the contingency plans laid out, it becomes easier to make a decision. At the end of the day, you have to rely on your experience, rely on evidence, rely on your advisors. You have to make a decision, and the decision needs to be a calculated one. It's okay to take a risk at some point, but the risk needs to be calculated, and there will be a reward at the end if you take calculated risk. And if you don't take a risk at all, you won't succeed at all.
Well spoken. So, best book you ever read? You said you're a big reader. What's the best book?
So my favorite book of all time is actually From Zero to One by Peter Thiel, a Silicon Valley investor entrepreneur. Actually, he co-founded PayPal with Elon Musk.
Wait.
And he is someone I have a lot of respect for. He's the one who actually really, I would say, enlightened me in the business perspective. He's the one who proposed the idea that you want to avoid competition. And he says, and I quote him, "The only reason businesses fail is that they fail to escape competition." This is a man who co-started PayPal, and he's a billionaire. Anybody who wants to get into business to read that book first.
Very good. That's interesting. I think I'm going to go read that too. I'm going to take a couple lessons from you here today. How about the best tourist attraction you've ever seen?
Oh, that's a good one. Best tourist attraction. That's a good one. When I was 8 years old, I had the privilege to go to a summer camp in California from China with a lot of school friends. I was an exchange student for the summer camp. I was young, and that really opened up my mind because coming from a small town in China where everything is bleak and communist style buildings, and then all the way to the West Coast, that was really an eye opener to me. And the tourist attraction in Los Angeles, in Universal Studio, I think, in Hollywood at 8 years old, I remember thinking at the time that, wow, the world could operate like this. So there is actually a world out there that's different from what I know. That's really what planted the seed in my heart to come to the United States later on in life, is because that really impressed me. That was probably my favorite tourist attraction of all time. For American listeners, they're probably, it's Hollywood. But for me, that was enchanting. It was great.
There's people that haven't been to Hollywood and might come from Wichita, Kansas and find that interesting. I remember a number of years ago taking my kids to Hollywood and looking at the stars and on the street.
Yeah.
And that was always cool. How about a best meal type of food? What do you enjoy the most?
Just a good old American breakfast. I remember I went to Eastern Europe and Budapest, Hungary for study abroad one summer in college. And the thing that I missed most was American breakfast. So I came back and went to Waffle House and had a big old American breakfast there. The first thing I did coming back from Europe. That's really my favorite meal. I love American breakfast.
Hey, so I'll tell you what, I'll make you a deal. If you ever come to Chicago, make sure you call me. We're going to go to a place called White Palace Grill. It's this old dingy diner that's been there for years. It's been on that show Diners and Dives.
Let's do it. I'll amaze you at how much I can eat. So there you go.
It's been great having you here today. Please tell listeners how they can get a hold of you if they want to talk to you more about mobile homes or being an investor. How do they get a hold of you?
Definitely. So the best way to get in touch with me is to go to our website at johnscreekcapital.com or email me right here at cdunford@johnscreekcapital.com, or you're welcome to call me directly on my phone, 470-265-0911. So I will be on standby.
We'll make sure all that gets in this show notes. Charlotte, thanks for being here. Appreciate your knowledge and your wherewithal as a human being. I'm honored by you. Thanks for being here. Hey, listeners, we'll be back next week. Appreciate you being here today. You know how much I appreciate each one of you. If you need anything, don't hesitate to reach out, and I will do whatever I can for you. Have a great week.
Thank you, guys.
Thank you, Mike. And thank you for joining us for another great episode of Insider Secrets. As always, Insider Secrets is brought to you by My Core Intentions. Wherever you hang out on social media, you will find Mike and My Core Intentions. Please like and follow us to get the most up-to-date real estate investing trends. Visit mycoreintentions.com, where you can get expert coaching on all things real estate investing and property management. If you're looking to become an expert, Mike's coaching will help you scale your real estate investment business. We're looking forward to having you back again next week for more insider secrets.